Oh, here they are. Didn't see you guys.
Hello,
Oh, where do you want to sit?
wherever you want.
You choose.
Wherever you. I can sit you sit in the
Oh,
middle.
no. I'm way too big. I'm way too big for
This is my
this.
home.
Hi everyone, hope you're all doing well on this fine day here in the car. Today we have a fireside chat, which is going to be slightly different than a panel. It's going to be more of a chat between the three of us, and I'm happy to be moderating it. So my name is Mohamed Karar. I am a venture partner at Launch Africa Ventures, and here with me is Mariam Dieng. I think in Senegal, most people here know Mariam in the tech ecosystem as a big proponent of the Senegalese ecosystem. She is also the Africa lead at 500 Global. Also here we have Ben Morel from Briga. Yes. So Ben was actually a founder and an entrepreneur before being an investor, and that's always to be respected, right? So he brings lots of experience as an operator and also as an investor. So it's lovely to have you guys.
Thanks for having us.
Thank you. Thank you, Mohammed.
Yeah, so our topic is dissecting industries, investors, and entrepreneurs in Africa. So we have quite different perspectives here on this panel. And the first thing we're going to start is dissecting the industries. So a lot of people are always like, it's not everything fintech, right? Everyone is like, it's fintech this, fintech that. So what do you guys think are some of the industries that are going to be needed infrastructurally, maybe in the frontier markets, and also some of the industries that we should move to once we have a lot of the tech infrastructure around the continent?
Thank you so much, everyone, for being here. It's a pleasure for me to always be in Senegal. I always love to be able to be at the Africa Arena in particular. There's just so much talent, so many founders, and always so much to learn from other investors as well. From an industry perspective, I would say that, so personally, and also I think 500 would agree, fintech is definitely an interesting industry, right? Because initially it was about creating financial literacy and giving access to financial services. But when you're looking at the need of the continent, I think, and now so with the latest crisis, something that we should definitely pay more attention to is food sustainability. So I could not emphasize more the importance of agri-tech companies. And I know that often they are less attractive as that fintech because they have a lot more of an infrastructure-heavy, cash-burning approach. But when you're looking at the real issues on the continent, food sustainability is one of them. So for me, a priority is really to be able to understand how do we build better agri-tech solutions and how can we keep on funding them because they do need that funding. The second industry that I think we're seeing now a lot more evolve is definitely edtech. I mean, we are a continent that average population is below 20. And I could not believe that education is not a priority. And again, going back to my initial point, definitely less attractive than fintech. But when we're looking at the growth of the population, for example, Senegal was around 12 million people in 2015. Today, we're about 18 million people. So the growth of the population and the fact that that population is increasingly getting even younger makes it even more critical to figure out fintech. And edtech is definitely an industry that we need to invest more into. The last one that I would say is marketplaces. Marketplaces because today, we're very excited about startups, and because it's high growth, high speed, high scale, high revenue. But Africa's economy is built upon SMEs. Small, medium businesses are the backbone of most of the both informal and formal economies on the continent. And they need to be able to have access to supply, access to logistics, access to be able to give direct access both to their customers, but also to their end-to-end suppliers. And I think today, marketplaces like the ones we're seeing in Egypt from MaxAb or TradePod in Nigeria are solutions that are really looking at both addressing scale from a startup perspective, but really addressing the needs of SMEs, which again, from a public sector, we've always been trying to address the needs of SMEs from a public sector. But I think today we've seen that there are business models from a startup perspective that can actually help the growth of SMEs.
Good morning, everyone. So it's a pleasure to be here with you, Mariam and Mo, with all of you today here in Dakar, and trying to share my perspective on the continent, and bridging that sort of gap between Europe and kind of bring our experience as well, in terms of seeing what we saw working and what are the trends, of adapting also the models of the Silicon Valley to another geo, right? Because a lot of people think that it's kind of plug and play, but it's not, right? I mean, the US work in their own bubble, and they have different traits to other economies in terms of size, languages, everything. So you cannot just say, okay, it worked there, it's going to work here, right? You need to adapt locally. And I think having a European perspective with different countries, different cultures, is obviously a bit of a help to understand Africa a bit better. Obviously, it's way more different, but still, you have some similarities in terms of creating these hubs and cultural differences. And so, to your point, I think when you look at any ecosystem, and it's built as a pyramid, right? You need to sort of be able to go from the sort of very small stage all the way up in terms of companies. But even in your day-to-day life, I think Maslow pyramid is what it is basically. It's like you start with the basic needs, and then you go up as your economy thrives. And to your point, if you take into consideration the fact that African population is going to double in the next 30 to 40 years, and so we're going to be adding an extra billion people to this continent, all of a sudden you put into perspective what is going to be needed by these people from the bottom up, right? And therefore, food, education, health, housing, transport are the kind of key elements of what the African continent will be needing for sure, right? When you talk to sort of the incumbents of this world working in the education space, they still think education with brick and mortar schools and and paper books and all of this, but you're like, hey guys, we're going to be adding 1 billion young people in the next 30 years. Do you think we have the capacity to build even the number of classes you need, right? Even the number of schools you need to do this? It's insane. So we really need to embrace that technology revolution for it to be proven. Otherwise, it's going to be a disaster, and not only for Africa, it's going to be a disaster for the world, right? And maybe to your point on fintech, I think fintech is hard because it's the second backbone of the economy, right? You need to be able to pay people to transact, to actually be able to grow an economy. You need to be able to finance and invest once you get the returns of your investments. So that's why it's fully digital now, and it's needed for everything else to work. To your point, I think agriculture a little bit more complicated. Transport and logistics as well is needed for any economy to work, but it is more sort of hardware based than anything in fintech. So the fintech wave, it's not gone, it's going to be here for a while, but I think it's instrumental for the rest to be built on top of it. And if you think of, digitization of the world, you need the network first, and Africa is quite fair advanced there. It's not perfect yet, but you still have good connectivity and access to the internet, which needs to be improved, but it's on the right track. Once you do this, and once you have the capacity to pay online, well, all of a sudden you open the door to the full digital economy, right? You can connect and pay, and then you can imagine tons of business models with, activities a little more operational, but still instrumental to the growth of the local markets.
I completely agree with that, and obviously there is still lots and lots of space for fintech to grow on the continent. I want to go back to a point that you made a little bit earlier, Madam, with the specific example of agri-tech, that it does need a little bit of infrastructure, it does need quite a bit of capital, and maybe even get a little bit of the heavy assets. So we often, as investors, come across founders that really struggle to come up with funding for that, especially non-dilutive funding or debt funding. There's a huge lack of that on the continent, and banks in Africa tend to not want to finance them as they're trying to be scalable, and so they don't have any collateral to offer them for that. So as we talk about how entrepreneurs can navigate these spaces, how do you think the ecosystem should evolve to kind of make sure that we don't have this issue where they either have to drive up their valuation or get overly diluted on the cap table to raise funding and raise for this kind of machinery?
I think first we need to understand how pre-seed and seed investment works. I think, and to the defense of the way that it's been done so far, resources are scarce. So investors feel a lot of pressure to have funds that can return. And so they are a lot more conservative about how they are giving out checks at the seed stage. But my approach, which sometimes could be seen as a little bit more controversial, is that as a seed and a pre-seed investor, you need to lead rounds and you need to give out checks to founders, even to those that are not published yet. Because if you're not doing that, nobody else will, right? So if you're meeting a founder and you say, how much are you raising? Like the founder that I asked earlier, and you say, I'm raising 1 million. And I ask, okay, how much of that capital you have committed yet? And you say 0. My job is to be that lead investor. I can't expect somebody else to commit to that round as a seed round if I am a seed investor and just follow, right? So I think, and you guys at Launch Africa are doing something very similar, I think there should be a lot more audacity and courage from investors to bet on founders when they haven't raised capital yet and when they're leading cash-intensive businesses. Today, we've invested in a company called Maxab, based out of Egypt. Maxab has a very marketplace for big suppliers and small businesses type of model, very cash-intensive. When we took a bet on Maxab, we were, one of the first checks to come into the company really early, very informal, and looking at informal market. Today, Maxab is about to is closing their round for $77 million as a Series A. They are one of the most valuable companies today in Egypt within the model that they run. But also, we have a significant amount of our portfolio companies that are never going to get to that level either. So we have a lot of companies that are going to close down, a lot of companies that are never going to get to the Series A level, but that's the bet as a seed investor. So you are creating a top of the funnel type of deal flow, right? You're investing in a lot of companies, you're taking the bet and the lead in a lot of companies, and then you are basically trying to give them the support that they need to get to that next phase, understanding that the nature of venture itself is risky and has a high failure risk. When you're looking at companies that we're investing in Silicon Valley, let's say Silicon Valley is the place where investors invest the most in companies. The failure rate of startups in Silicon Valley is still today at 85%. So 85% of Silicon Valley-based companies who are raising money are still failing today. So we couldn't expect other emerging markets to, with less funding, less opportunities, and less of a developed market, to perform better than that. And then to punish them for not being able to do better than that. Because today, the market that received the most funding, that's the benchmark, right? And I think sometimes, again, to be fair, because resources are scarce, seed investors are a little bit more careful about where they put their money because they are conscious of the fact that they have to also, your investors also have investors that they report to. So they also have their own bosses who they have to go back to. But the nature of seed funding is risky. it is about creating a big funnel and helping those founders to hope that some of them will convert. So to go back to your question, when we're looking at agri-tech companies, ed tech, health tech, marketplaces, we should be a little bit more audacious in being able to back those companies and back them early and lead those rounds, and not only look at fintech as a proven model, right? Because it's becoming a safer route to take, depending on the country, but it's becoming a safer route. And I would challenge, really, all of us to be a lot more objective in the way that we're thinking about these founders and understanding that somebody has to lead. So if we all follow, nobody's going to raise anything.
I have a different look at this, but kind of coming to the same conclusion, more or less, right? I think, like in any emerging ecosystem, yes, investors need to do quick returns because they want to prove to their investors, their own investors, their LPs, that it's a good idea to invest in that asset class, right? So that's probably why fintech is so hot at the moment, because people are like, well, if I can show returns, then it's going to be way easier for me to do the next wave and all of this. At the same time, what I see and hear from a bunch of people is that there's a big chunk of the money into African tech which is coming from DFIs, right? So it potentially gives you a bit of a different profile where you're like, okay, this part can be either more patient, and that's a question to be had with them, and or can be combined differently. So not only kind of capital into funds, but maybe capacity on the side. And therefore, to your point, I think once again, you know, as I was saying earlier, applying recipes that work in the US directly here is a source of failure, because obviously as of now, I mean, the US market, they have the infrastructure, they have the education, they have access to food, they have all of this is in place. So yes, you can build marginal businesses that are only tech-based, but it's not the case here. And so here, it takes the courage and the bravery of the people who were investing in tech 40 or 50 years ago in the US, where you're like, well, you want to start anything, you want to build Intel, well, it's going to be CapEx intensive, right? Because we have to build the factory. We have to do this. Otherwise, this business doesn't exist. So that audacity, I agree with you, is important for people to say, okay, it's not going to be light touch. It's impossible, right? Otherwise, we're just going to do fintech, and that's it. But what you do fintech, if ultimately the economy doesn't develop, well, it doesn't work. People don't pay, don't transact, so it's a failure. So people need to understand that, outside of this, yes, there are CapEx intensive businesses, and maybe it's a combination of equity plus debt from DFIs, and therefore that's why building a base of LP who understand the market and are open to that kind of models is important, because at the end of the day, that's how you create the underlying economy for the continent to thrive. Otherwise, light touch doesn't work. I mean, I take this example very often. If you look at the European market, for instance, we play in the tech space in a zero-sum game. There's no growth. I mean, population is flat or decreasing. And everyone already has 2 TVs and 2 cars and, way enough pair of sneakers. So that's why they come up with the metaverse and all this crap, right? It's like, oh, what else can we do on top of everything that we already have, right? It's totally different here. I mean, here you're in a different world. So let's not try to apply the same recipes to here and build our own world of tech, adapted to the continent. Not meaning that it's better or worse, it's just different because it's different, right? We are in a different environment, let's build it differently. And then, further down the line, yes, we may add other light touch digital development companies. But, being an entrepreneur is about solving real problems, right? So I think Africa has other real problems than the metaverse.
So continuing on that, some of the nuances we have here in Africa as opposed to some of the more advanced markets. Startups are always looking to disrupt. They want to disrupt the whole market. They want to disrupt everything that has been doing. But here in Africa, especially the ones that are looking to disrupt, they're looking to remove a lot of the intermediaries and a lot of the systems that are already existing. So sometimes I run into two schools of thought, the investors, and more often than not, foreign investors, they are looking for those ones that are like just gonna disrupt. And sometimes you find another school of thought where investors are looking for entrepreneurs that are gonna enable the current systems and work with them. One example of that in Egypt, in the insurtech market, you have ones who are trying to sell insurance directly online, direct to the consumer, from their platform, or you have others who are trying to build for the already existing agent network that the people are already used to, especially in the smaller cities. So what do you have to say to that, and as an entrepreneur, and wanting to give advice to some of the entrepreneurs here in Africa that are constantly getting pressure to disrupt, when sometimes the better solution is to enable the current ecosystems that are there for a reason?
That's a very good question. And so it can be, again, I have very controversial views on this, but to me, you can't really disrupt a system without working with those that were already part of the system. So if you're trying to cut off the intermediaries, right? So in some of the ways they say, oh, there's too many middlemen in African economies. There are too many people on the chain that are taking a little bit of the transaction until it gets to actually the end customer. And you're trying to come in as kind of this, direct solution. You will probably face a significant amount of local resistance. And especially if you're raising for, and we've seen that for us at 500, if you're raising from international investors like us, and you're facing a significant amount of local resistance, there's nothing that we can do to help you move that, right? Because when you're looking at these markets, and you're looking at the existing actors in them, a lot of it comes down to how do you actually enable them to find a different place in the supply chain that continues to create value for them, but also creates now value for you and increases the experience of the end user. And I think when we're thinking about it too much as a direct disrupting model, I love to use the example of Spain, because I live in Barcelona. And in Barcelona, we don't have Ubers. And it's quite surprising because there are Ubers in Madrid, there are Ubers in lots of different cities in Europe, but in Barcelona, we have no Ubers. So when I came, the first time that I moved there, I was curious about why are there no Ubers in Barcelona? And the story I heard is that there were Ubers in Barcelona at first, like Uber tried to launch in every other country. And then there was a significant amount of bullying, lobbying, even intimidation done by the taxi industry to Uber in Barcelona specifically. And it worked. It didn't work in Madrid, but it worked in Barcelona because of how strong the taxi network was, but also because people were feeling like Uber was going to take money out of their plate. And so when you're looking at here, especially on the continent, when we're thinking about the models that we want to build, I think it's important to think about three things. The first one is about the quality of service that the end user is actually getting, because that's why we're building innovation in the first place. We want to improve the quality of life of people. So we want to create services that are actually improving their experience of products, their experience of different usage, and their experience in society, right? But the second thing to also think about is that here, for the most part, Africa has been built historically in a circular economy type, right? There are different ways to involve different actors. And I think when we're trying to think about what economic model do we want to have, we need to keep in mind, are we wanting to create a bullish approach where we just come in and move everybody else out of the way and create a direct path, but then we'll face resistance later on and we'll basically be spending most of our time fighting legal battles and fighting societal unions? Or do we want to create models where everybody can participate and everybody can win? And I think that this is also where we are different from Western models. And this is where we shouldn't be thinking about this copy-paste model, right? If we are saying that innovation is a path to economic development, then it should be a path to economic development for everybody, including those that were already in the circular economy, and including those that we want to work with in those particular sectors. So I have a very strong stance on the fact that we should try as much as possible whenever we're building these companies to think about how they are affecting our overall circular economy, and also think about what is the world that we're creating and what is the type of society that we want to build. Because we are at that early stage now, and we were talking about it yesterday with other investors. A lot of last year and 2020 and 2019 actually was trying to prove the African opportunity. Right? All of us were just rushing and advocating and pushing to try to get people to invest in African startups because we wanted to prove that there are viable African companies today that you can invest in through VC as an asset class and that it can yield return. That was like the mainstream objective, the only thing that we tried to achieve. Now, 4 years down the line, now that we've proven that opportunity, it's time for us to actually sit down and think about how do we structure this opportunity? How do we actually make sure that we're building this opportunity to be a win-win situation for everyone, including female founders, including the mass economy, including rural economies, including young people? So that's where I feel like we should be very careful in not just jumping very much into these forward mass-scale, massive Western approach to tech and innovation, because we are different, and also the reasons why we're doing it is different. A lot of the African founders, and this is why I asked earlier, one of the founders who was pitching, why was he building his company? A lot of the African founders are building their companies because they see a real need, a real issue that they want to solve. It's not simply because they want to make monetary value, and it's not simply because they want to exit and be on billboards, and it's not simply because they want to make merchandise on t-shirts and have their startup logo everywhere. It's because they're experiencing issues on their family are experiencing issues, their communities, and they're trying to achieve and actually solve those issues. And for me, we should focus on that goal primarily and build different models that are achieving that goal as a primary setup, rather than necessarily just trying to copy-paste US models.
That's an excellent answer, Marem. So we're going to start the Q&A session here. Sorry to cut you off, Ben. We probably have time for one or two questions. Probably two questions. So do we have any questions from the crowd?
Okay, thank you. This is a great panel. I appreciate the fact that you guys are willing to address the elephant in the room. I think that's very courageous. And I'm going to follow your lead, and I'm going to spice it up a little bit. I've seen let's say the US ecosystem, more specifically the Silicon Valley, and I see how we evolve here. Maybe too often, on the VC side, when we're looking for information and guidance, we're talking to the guy who's doing the due diligence. And this is the guy who's getting paid to figure out why we should invest in you. So it's a whole different perspective. This is a guy with a lot of degrees who's very technical, who's going to brag about the fact that he's reviewing 400, 800 decks per round, and so on and so on. And he's very good at looking for the mistake. But at the end of the day, he's useful as a safety net, meaning we require that person when we already know we have something with good potential, and we just want to make sure it's safe. So why is it that it's always that person that represents the community and explains to the founder why they should fail and how they should not fail? In a sense, what I'm leading to is this is maybe why you don't see that courage from the VCs. We all know it's a poker game. At the end of the day, many will fail, very few will succeed. And regardless, and we see it more in the Silicon Valley, it's so small that there's always consideration for, let's just try it. You know, we think it's a good idea, it's crazy, but let's just try it. We don't see that here. Too much fear.
It's a tough one, right? It's about culture, and you know, you don't change culture like this, right? It takes a bit of time. So I know it doesn't go with, you know, the sense of urgency startups have, but look, it's changing, right? You have 3 investors on stage telling you that, you know, fuck, we should, you know, change the world and, you know, create our own economy and our own digital space in Africa, right? So I think the trend is there. You have to be a little bit patient for it to work, and so we'll try to convince more and more people to have the same approach. But, you know, trying to bridge your point and your point, Mo, the exciting bit now is that we don't have to disrupt in Africa, right? Disruption is for Europe and the US because the economy is there and you're fighting against incumbents, right? There's no incumbents here. We are creating, not disrupting. And this is bloody exciting, I think. So more and more people are going to join the party because, you know, we are creating here something new. So you'll see, it's going to change. Be patient. Give us a few months so we can convince the rest of the crowd.
Yes. So thank you very much for this panel and the strong discussion we had. So I'm a business angel, and my question to you is like, what do you bring specifically in this market as a VC that is different from what a VC what an American VC is bringing to a Silicon Valley company?
Let me make sure I understood that question right. You said, what are we bringing to an African founder here that's different from what we would be bringing to a Silicon Valley? Here. Okay. I think, so we have 2 different types of vehicles, but at least from a 500 perspective, for us, the most important thing, really, and so of course all VCs will tell you they bring, you know, a network, support, capital as a first step, and basically like different resources on how to think about your next growth stage. I would say for us, 500 specifically, the most important thing today is that half of our unicorn companies are outside of the US. So we have today about 48 unicorn companies. Half of them are based in Latin America, in Southeast Asia, in Eastern Europe, in the Middle East. So when we're trying to actually think about value add to our founders, we're not even thinking about our Silicon Valley models, right? We're thinking about, did you see what Bukalapak did in Indonesia? And how does that basically compare to what you're trying to do in Pakistan? Or how does that compare to what you're trying to do in Nigeria? Because some of the actually best learnings are coming from other emerging markets. Today, Latin America and Southeast Asia are basically where Africa would be in the next 4 to 5 years. But they're already there today. And we're investing actively in those markets. Today, we've invested in more than 250 companies in Latin America, 300 companies in Southeast Asia. So we're looking at those markets daily. And when we're talking to our African founders, it's really important for them to also look at what's happening in those markets. Because from one, they could learn a lot from a lot of the mistakes that those founders have made, so they can gain time and money. And second, today, of course, when we're thinking about, I think when we're thinking about what an ambitious African company would do, we would say, you know, you could dominate the African market. But we think you could dominate the African market, the Latin American market, the Southeast Asian market, Why couldn't you, right? If you're a unicorn company here, why couldn't you also be starting operations in Malaysia? Why couldn't you be starting operations in Thailand? And I think to that barrier level, sometimes, you know, on the continent, we dream small, right? We think, if I can dominate my domestic market here in Senegal or in Nigeria or in Cameroon, and then maybe if I could open in Nigeria, Kenya, South Africa, and Egypt, that's pretty good. And I think they could do much, much, much more than that. Today, some of the companies that we have in our portfolio that are African companies are opening up their operations in Brazil, opening up their operations in Pakistan, opening up their operations in Indonesia. And the amount of learning that they are doing just by doing that, but also just the amount of now interest that global investors have in those companies, because it's not just an African company, right? It's a regional company, it's a sub-regional, they go beyond the continent, is creating an opportunity that, you know, we've never seen before. And I think a lot of the times, again, going back to my point, we dream small here, and even more so, and I will make even more a stronger point, Francophone Africa, we dream even smaller. And we often, we're very humble, and we're very kind of trying to constrict ourselves to perfectionism before we allow ourselves to make mistakes. But you only get to perfectionism through multiple mistakes. So you only get through that level if you try to start operations in Morocco and you fail. And you think, oh, right, that was not the right way to think about it. I'm going to do something kind of similar in Tanzania, but I'm going to think about it differently because the way that I approach the North African market was different. So I think that is something that's quite different that we want to bring, but also I think it's something that founders need to think about more.
Do we have time for an answer? 1 minute answer. Okay. Look, there's good and bad investors. You know, there's good investor in the US, bad investors in the US for Africa. You know, so it's all very personal. As far as we're concerned, I think, you know, being all founders, we demonstrated the support we can bring to the table to the people we work with, bringing our experience and expertise, as well as our scaling team to help them grow, both on the talent side and on the building a company side of things, right? So to your point, you know, sharing that experience, whether you acquire it indirectly with other cases or, you know, you've lived it as a founder, I think is instrumental to help people go into the right direction.